Okay, so hi TikTok. If you're just joining me, and hi Instagram, hi YouTube, and hi Facebook. We're also live on Facebook, so we got all of us going right now. All right, so I'm gonna cover. This is how I'm typically gonna start this. And guys, if you just your first time joining my live, my name is Duke. I go by Duke Loves Taxes on social media. Um, I am a tax professional. I live in the Dallas area, and I'm also an entrepreneur. I'm a small business owner, just watching this. So we're all in the same boat when it comes to this. Just want to make sure I get this set up. So pretty much how I start these lives out is, hey, I'm gonna go over a few updates, and then you guys can ask me questions. Because guys, I know there is a lot of DMs I get, and I'm not able to get to all of them. So that's why I kind of set up these lives so I can get to them for you. Okay. So that's how pretty much these are gonna go. I'll make sure this is set up correctly. Oh, it's coming off of my camera. Okay. So first I'm gonna talk about cash donations. And what are we doing? I'm gonna talk about charitable contributions and what's new this year when it comes to charitable contributions. So cash donations of up to $300 made this year by December 31st, 2020 are now deductible without having to itemize when people file their taxes in 2021. So typically, if you wanted to claim a charitable contribution on your tax return, you would typically have to itemize. Okay, so itemize means you can either take. So when you itemize, you can either take the standard deduction or you take itemize. You can't take both. This year, you're not required to itemize to take that standard deduction. To take that charitable contribution. The Coronavirus Aid, Relief, and Economic Security Act includes several temporary tax law changes to help charities. This includes a specific $300 deduction designed especially for people who choose to take the standard deduction rather than itemize their deductions. This change allows individuals taxpayers to claim a deduction of up to $300 for cash donations made to charity during 2020. This deduction lowers both adjusted gross income and taxable income, translating into tax savings for those making donations to qualifying tax-exempt organizations. So before making a donation, taxpayers should check the tax-exempt organization search tool on irs.gov to make sure the organization is eligible for tax-deductible donations. So guys, if you're giving a donation, especially a cash donation, you want to make sure you're giving it to a legit organization. So the IRS has a tool where you can check to make sure that's a legit organization. It's the tax-exempt organization tool. Cash donations include these made by check, credit card, or debit card. They don't include securities, household items, or other property. Though cash contributions to most charitable contributions qualify, some don't. So please provide. So you should review publication 526, charitable contribution for details. Cash contributions made to supporting organizations are not tax deductible. The CARES Act includes other temporary allowances designed to help charities. These include higher charitable contribution limits for corporations, individuals who itemize their deductions, and businesses that give food inventory to food banks and other eligible charity. So for more information, visit the Coronavirus Tax Relief page on irs.gov. So pretty much if you're just joining, what I'm covering is that, hey, the IRS is saying that you do not have to itemize to take $300. So I'm gonna just walk through that real quick. Sorry. Why does this dude look like a model? Dude, you're doing so high. Click conversation. Does anyone know shadow figure standing outside the window? What's up, Adam? hey, what's up? Okay, guys, real quick, I want to go over what I was just explaining. So I know that was a lot. Okay. So, this is good. Some of those are my races. So pretty much how this would work before. When we take charitable contributions, you can either itemize or you can take the standard deduction. So you can either itemize or take the standard deduction. There's only two. So when we look at the situation, we're going to say, hey, itemize, right? Itemize or standard deduction. Okay. So when you're filing your tax returns, those are the only two options you get. You can either itemize or you can take their standard deduction. Okay, can you explain? Yeah, 1040X, I can explain that later. So yeah, 1040X is if you mess up your return and you need to make a correction, you're gonna admit that return. Okay, so you can either take the standard deduction, guys, or you're able to itemize. So when typically people take, or generally I recommend that you take the one that yields the higher deduction. So for 2020, let's say you're single, it's just you. The standard deduction is $12,400. And guys, if you're just joining, I was just covering over a new update that, hey, you can deduct up to $300 in charitable contributions without having to itemize. So real quick, we're gonna go over that. So the standard deduction is $12,400. Now let's say when you're itemizing, you have charity right here. And let's say you also have property taxes. Property taxes. Let's say you gave charity about $5,000. Let's say you get charity $5,000. You have property taxes of another $5,000. Okay, so on the itemized side, right now we have charitable contributions of $5,000. We have property taxes of $5,000. So if we were to add these two together, right, our total itemized deductions would be $10,000. $10,000. Okay, so you want to look at this. Hey, do I want to take the standard deduction, the one that's given to me? Or do I want to take the itemized deduction, which is the $10,000? So like I said, generally people take the one, or generally I recommend you taking the one that yields that bigger deduction. In this case, it would be the standard deduction. So you see how we gave, even though we gave $5,000 for charity, we can't deduct that, right? We're not going to be able to deduct that because we're going to go with the standard deduction, right? So in the past, that's always like going away, or we couldn't even use it. So even if, I'll make it even more clear. So even if this was $300, right? So then our total itemized deductions was $5,300. Okay, so even now with $300, our total itemized deduction is now $5,300. We still cannot deduct this charitable contribution because we're itemizing. So this is where that new law came in, and I'll just read it again for people who are just joining. Cash donations of up to $300 made this year by December 31st, 2020 are now deductible without having to itemize when people file their 2020 tax return. So what that's saying is, hey, we can take an additional $300 in cash charitable contribution. So what this new law is saying, or what this new act is saying, is that, hey, you don't have to itemize up to $300 to take this contribution. So instead of standard deduction, which we is known as $12,400, really we're looking at now, if you give $300, we're looking at $12,700. So guys, a great way to, give back to your community, or give back to something or some nonprofit organization and still be able to reduce your taxable income. So it's a win-win for both of you guys. Is, hey, give $300 to a charity, right? And it has to be a tax exempt organization. So the IRS has a tool where you can search for that, and that should be able to help you. So you can't just like, you see a homeless man on the side of the road, or your cousin or someone like that, you just give them $300. No, that's not going to work. It has to be towards a tax exempt organization. And you can do that by using the IRS tool to figure that out. Okay? So, yeah, that's the updates I wanted to cover. Now, after that, just about 10 minutes, want to knock that out the way. Now I'll jump into some of you guys' questions if there's any. Okay. So the 1040X, the 1040X is how you amend your tax return. So let's say you did something you weren't supposed to do, or let's say you were supposed to claim depreciation and you need to go back and fix something. So guys, if you made a mistake on your previous year's tax return, you need to go back and fix that. You're going to want to amend that return. You can do that with a 1040X. I day trade since May, and my initial investment went up 3K. What are the tax consequences? Okay, so that's a great question. All right, so, and I hope everybody understands this part. I just wanted to cover that. So we're talking about the day trading. Okay, so stocks real quick. All right, so stocks. So the question is, sorry, so the question is, I just messed up. I day trade since May, and my initial went up 3K. What are the tax consequences? All right. So stocks, anytime you have stocks, you're gonna either have a recognized or a realized gain or an unrealized gain. Okay. So let's say you have your stocks, right? Let's say you have your stocks, and in that app, this is what's really important. So in that app, let's say you put $100. $100. You put $100 into the app, okay? And then all of a sudden you realize, oh my gosh, it went up to 3,000, like this person said. It went up to 3,000. Let's say it went up to 3,000. You put $100 in, and it went up to 3,000, but you didn't do anything with it. You just, you just said, wow, that's so cool. It went up 3,000. That's what you call, you have an unrealized gain. That's when you have an unrealized gain. That's when you notice it, but you don't sell it. Okay, so there's no tax consequences when it comes to that, when you just notice, right? But let's say when you actually sell it, then you have and this is an unrealized gain. This went up by $2,900. Okay, so you have an unrealized gain of $2,900. But let's say that you actually do sell it. Let's say you go out there and you sell it, okay? You go out there and you make a sale, you sell it, okay? Then you have a realized gain. A realized gain of $2,900, okay? You have that realized gain of $2,900. This is what you're going to pay taxes on, okay? So when you actually sell it, that's what you're going to pay taxes on. Okay, so I hope that makes sense. So you don't pay taxes when you only pay taxes when you sell it. Okay, that makes sense. I need to add my 1099-T. Yeah, so then if you have to add something to a previous year tax return, then yeah, you probably have to make that. Do I have to report money that goes into my Roth IRA? It may be asked on your tax return, but you're still gonna have to pay taxes on that. So how much is $2,900? And we have this realized gain of $2,900. There's two ways it's going to be taxed. It's either going to be taxed at your ordinary tax brackets, or it's going to be taxed at a capital gains tax rate. Okay, so we have capital gains, okay, and then you have ordinary. Ordinary. You have capital gains, you have ordinary, okay? So if you hold on to your stocks for a year or more, you're going to be taxed at capital gains rate, which is anywhere between 0% to 20%. And I believe like the first 40,000 is like 0%. Okay. So if this was a long-term capital gain, you wouldn't pay any taxes on that stock. Okay. But if you held it for less than a year, and let's say you're in a 10% tax bracket, you'd be taxed at that 10%. All right. So it's my first time adding money to my Roth IRA, but I'm confused on how you pay tax. So you're not gonna. So your Roth IRA. I mean, the income is coming from somewhere else. So let's say you have a job. That's where it gets taxed at. You're not gonna have. You're gonna have to pay tax on the income in the whole. You're not gonna pay tax on that Roth IRA. There's no sound. Oh no. Can't understand why there's no sound. Dang, it's always something. Let me see something. So Facebook is saying there's no sound. Check the title on your extra videos on Social Security. Okay. Guys, can you guys hear me? Let me know if you guys can hear me. Let me know if you can hear me, because okay, you can. Oh, strange. And I wonder if you guys on YouTube, you guys can hear me. Cool. We can hear. Okay, cool. Yeah. So when you're adding money to your Roth IRA, the income is coming from somewhere else. Like I don't know. I'm trying to explain this as best I can. The income is coming from somewhere else. So you're not really reporting it because you're paying the taxes on it, right? So let's say even if you got paid like a long time ago, you made $6,000 somehow. So those taxes should have already been paid, if that makes sense. Let me go back live on Instagram. I currently don't pay taxes in general because my annual income is too low. Yeah, so yeah, guys, if you're below the standard deduction, you're gonna have to pay taxes on. That's another great idea. If I have a small business, will I have to pay taxes on that because I have a small business? It depends. If you have a small business, you're typically going to file a Schedule C with your personal tax return. Now, if your net income on Schedule C is $400 or more, then you're going to be required to pay like self-employment tax, and you also will be required to pay federal tax. So on your net income. Okay, so let me go over that real quick. Okay. So let me go over that real quick. So you have a business. Your business. Okay, actually, I'm sorry. So you have a business. Okay. So if you have, it could be a sole prop. You're gonna be taxed as a sole prop, even if you're an LLC. Even if you're an LLC, you're gonna be taxed at this sole proprietorship. Okay. Thank you for going on stock. I hope it was helpful. Okay. So even if you're an LLC, you're gonna be taxed as a sole proprietorship. So let's say your business income comes in. Okay. So let's say you had $100,000. Okay. Let's say you had $100,000 in sales. Okay. And then in expenses, right? Let's say your expenses was $25,000. $25,000 in expenses. So you had $100,000 in sales. You had $20 in sales. I just tuned in. This is my topic. Yeah. Okay. So this is how you're going to be taxed if you're sole proprietor LLC. $100,000 in sales, $25,000 in expenses. So your net income It's 75,000. 75K is your net income. Okay. So you're going to pay, this is where you pay tax at on the net income. Now, if you're self-employed, you're going to pay self-employment tax. You're also going to pay federal and state tax if you're required to. Okay. So this 75K, oops, you're going to pay self-employment tax of 15.3%. Then you're going to pay regular taxes. And that's when you're in a tax bracket. Okay. So that's how it's going to work if you're self-employed fellowship. Yeah. That was a great question. Let me know if that makes sense. Let me know if that's a question. I am beautiful. Okay, you can hear now? Yeah. And I've been working on Instagram, like how it's flipped. I can't get it to go back. So screenshot it. Yeah, I'll let you guys. So guys, you want to take a screenshot of this, write it down. This is how you're going to be taxed. If you're a sole proprietor LLC, you have your sales come in, whatever your expenses is. So these are the numbers you're going to fill in, right? And even if you're even if you're a 1099, okay? If you're a 1099 as well, the sales come in, the expenses come out. Whatever your net income is, you're going to pay the self-employment tax 15.3%, and then you're going to pay regular income taxes. And this includes federal / state. And all of this gets reported on Schedule C. Schedule C is where you're going to report that. So that's how it works if you're a sole proprietorship. I was trying not to get in the way. I noticed another screenshot was coming. Yeah, so that's how you're going to be taxed if you're a sole proprietor. That was a really good question. Dude, the man, what's up? Hey, what's up? I made $0 in sales because I just started. Do I file taxes on my expenses? It depends. And if you just started, this is a great question. If you just started, you're pretty much considered in startup mode. So the IRS, unfortunately, really doesn't see it as a business till you're making money or till you're making sales. So here's how that's going to work. So let's say you start your business, and by the way, congratulations. Congratulations, that's awesome. Congratulations on starting your business. Woo! Everyone, give them a round of applause. I know we're not on a Zoom class right now. I know we're out there. Hey. All right, here's our applause. Okay. So let's say you just started your business. Okay. All right. So we just started our business. All right. And so I'm not sure what you do, but guys, on this live. Oh, look. They're giving you a round. Everybody give them a round of applause for starting the business. Y'all see we got the hand emojis? So yeah, we can all give you a round of applause. I forgot. Way to be creative there. Bling Works. That's awesome. Okay. So let's say we started our business. Okay. So this is our timeline. This is our nice little timeline. And let's say we start our business in January, right? This is when we started incurring expenses and things like that. So we started a chicken sandwich business, and we bought some chickens. We bought some chickens, and we bought some bread. Okay, and then we hired some contractors, some 1099 contractors, and we paid them for training only. Okay, so let's say the chickens were $1,000, the bread was $1,000, and the trainer contractors was $1,000. So overall, we incurred $3,000 expenses on January. Okay, so in January, when we started our business, beginning of the year, We incurred so far $3,000. We did not make any sales yet. These are the expenses that we incurred in the process of making our business. Okay. So then let's say way over here, November, we make a sale. Okay. So when you make that sale, guys, I want you to realize, okay, now it gets real. Now we're in business. Okay. So once you make that sale, now you're in business. Between these 2 points, you're in startup mode. Okay. You're in startup mode. Okay. After this, you're in business. You're considered in business because the first rule of being a business is that, hey, you have to be doing an activity that you expect to make an income or profit from. So the easiest way to show that you're making an income or profit is that you're making a sale. Okay. So let's say, okay, we started in January 2020, but let's say we don't make a sale, right? Let's say we don't make a sale till March 2021, okay? We don't make a sale until March 2021. Well, even that whole year, in January 2020, when we didn't make a sale, we're still in startup mode. So when you file your 2020 tax returns, you're not going to even fill out a form. You're gonna start filling out that form when you actually get to go in business. So how I mentioned, hey, you're gonna file a Schedule C if you're a business owner. But in order for you to be a business, you have to be proving that you're making some type of income or profit. So if you haven't made a sale, but you incurred these expenses, the best thing that you're going to do right now is just keep tracking those expenses. Keep tracking those expenses, because when we jump into business and we're ready to get started, then we can deduct those expenses. But before that, all you're doing is incurring startup expenses. So when you start your business, then you can write up startup for business, and we can also write up the expenses. But if you're not making money, if you have zero sales, you just started this year, guys, don't even worry about filling out a form. Just worry about tracking those expenses. That was a great question. Amazing, man, right there. Thank you so much. You're welcome. You're welcome. I'm a real estate agent. My startup will be more than what I made as a negative income. So yeah, that's a great question too. So let's say you did make money, right? Boom. We made money. We sold a chicken sandwich. Yay. We sold a chicken sandwich. Okay. So it's okay to the money and get the tax return. Also, wait a minute, guys, give them around. Get by two store. I'm sorry, I cannot pronounce it. But we have a new real estate agent. Pretty much they start their own business. Yay! Anybody who starts their own business, if you tell me, you say, hey, I started my business, I'm giving you a round of applause. Thank you. Thank you for starting your business. Thank you. All right, cool. Congratulations, by the way. Okay, so let's say you started your real estate. You got your, okay. So let's say real estate. Okay. So real estate. Okay, so let's say you gotta pay for your license. You gotta buy. Let's say you bought a course. So let's say you pay for your license for $500. You bought a course for $1,000. Okay. And then let's just keep it at that. And then let's say, so your total expense is $1,500. All right. Then let's say you made your first deal, your first commission, and maybe that commission was $1,000, right? So you make your commission, right? You make your commissions, and that was $1,000. But you spent, $1,500. So your net income is $500. So you can use that negative income that you're having to offset other income. So yeah, guys, if you're starting your business, Congratulations, by the way. But you're also entitled to write that off. So don't worry about that. So yeah, you can use your loss to write off that. Can I put my new car? Can I put my new car for my? It depends. Thank you for the. When someone's giving you a high five on Instagram. Aaron Mohab, can we do business tax return? Yeah. What is your business? What is your business question? Like 1120. Yes. I'm sorry, I'll put this on the charger, guys. Yeah. Are we talking about business? Always business. Please post about that. Post. Can we get any kind of tax break on this message? Yeah. So guys, yeah, you can get any type of expenses. Doesn't matter when, right? You don't have to have an LLC. You don't have to have an EIN to get business deductions. The only thing you need to do is make sure you're tracking them. Thank you. You're welcome. Please do a post about that. Post about what I just covered, or just kind of let me know. I asked a question the other day about a tax notice I received saying my first return is due 12/21. Even my business is not up and running. I'm confused. I'm confused too. You received it. You see the question the other day about a tax notice I received. Not 100% sure. Saying my first return is that may have been from I don't know. I was it from the IRS or was it from the state? That's what I'm curious about. Was it from the IRS from the state? That's what I'm curious about. Yeah, hey, so guys, if you're just joining in the beginning of this video, this is all on YouTube as well. So if you missed any of it, you're going to be able to jump back on YouTube. You're going to be able to catch all of that. You're going to be able to catch all of it on YouTube if you missed any of it. In the beginning of the video, New York, yeah, that's New York sales tax. So that's something completely different. So if you're required, so that means when you set up your business or something, you told the state that, hey, I sell a taxable product or service. So if you sell a taxable product or service, you're going to have to file your sales tax. And so if yours is December, that means you filed it somewhere in the last fourth quarter. So yeah, you're going to have, I don't know when New York's is, but like in Texas, like we have to make it quarterly or you have to make it monthly. So what you want to be responsible for doing is that you're tracking the product or service that you're selling and make sure you're selling sales tax. You're charging sales tax, right? So you probably have a sales tax use permit. So when you sell something to your client, whether it's a product or service, you're going to want to collect sales tax. Whatever the sales tax is in your jurisdiction, you're going to want to collect sales tax and you're going to turn around. You want to give it to the state of New York. So that's what they're saying. They're saying you're going to have to follow that. So that's what they're saying. Yeah. Oh yeah. On YouTube. Yeah. Hey, yeah. I'm reposting on YouTube. So I just started like doing them on YouTube. But guys, in the beginning, if you're just joining, a quick update that I was saying is that hey, cash donations of up to $300 made this year by December 31st, 2020, are now deductible without having to itemize when people file their taxes. So pretty much in the past, always you can either itemize or take the standard deduction. It was either or. A lot of people would give to charity, but they weren't able to deduct it because their itemized deductions were higher than that. So now you no longer, well, not no longer, this year in 2020, you do not have to itemize in order to take a charitable contribution deducted. And that has to be made, it's up to $300. It has to be a cash contribution. That means you paid with a check, you paid with a debit card, or you paid with cash. So, yeah. That's what we're talking about. Yeah, it is on YouTube. So New York, I hope I was able to answer that question for you, Nick Diamonds. Yeah, but that was a great question. Yeah, so that's what that is. So I was like, oh, the IRS already sending notice, but the state, yeah, I will, because the states do want their money, especially in New York, especially California. Great questions. Whew. Okay. So guys, so daily, I'm here daily. If there's no more questions, I'm actually gonna get off. If there's no more questions, I'll actually get off. But I'm here daily at 8 p.m. Central Time. So 8 p.m. Central Time, I'm just gonna come on here, give you guys some updates, answer your guys' questions. I'm sorry that maybe sometimes in the comment sections I'm not able to get to all the comments, or in my DMs I'm not able to answer all you guys' questions. But what I can do, because this crowd is so small, is I can set up a live and I can walk through your questions one by one. So I really appreciate everyone who joins this live, that comes to this live. And I'm so down to help you guys out. So there's no more questions. I'm actually going to head off. And I hope you guys have an excellent night. Come back tomorrow, same time, 8 p.m. Central Time. If you have any questions, bring them. Bring them. You're doing an amazing job. Thank you so much. Thank you so much, guys. That was such a nice comment. All right, guys. And thank you, YouTube. I'm just starting this YouTube out, so I appreciate everybody who's watching on YouTube right now. Appreciate you, Instagram. Thank you so much, TikTok. And, of course, oh my God, I'm calling you YouTube the whole night and your Facebook. Wow. Bye, guys. And bye-bye, YouTube. Bye-bye, Facebook.